Yet another day when it's a little hard to explain the market, but I'll do my best possible job. We will talk, first of all, about the general market because, we'll talk about Tesla first because Tesla has so much news, it's hard to even count it all. And then we'll get into the general macro and what's going on with the markets today. And then finally, we had some late breaking news, which I put at the bottom of the page. So if you want to get some really interesting news that broke late, we'll do that last. Okay, so here we go. This is Randy Kirk, and if you like this kind of content, this is my Wednesday financial and Tesla news show. We do this again on Friday. I call it the Good News Friday show. And we do it again on Sunday night when we kind of predict what's going to happen coming up in the next week. If you like those kind of shows, you might want to subscribe and hit notify so you can be reminded that those are going to take place. And then, of course, I'd love to have more folks joining me on Patreon. Some big news coming up with regard to Twitter subscriptions, maybe over the weekend or on Monday. All right. So Tesla did better today than expected, given the sell-off, except then it didn't. So it was a topsy-turvy day. Tesla starts up in the early morning, and while the stock market was not doing so well, then eventually the stock market started to kind of come back near the end of the day, and Tesla continued to be down in the dumps after it took a big fall. So what was that all about? Well, let's talk about the good news first. So much good news. I'm just going to go over this briefly. I have other videos yesterday, this morning, yesterday, talking about some of what I'm going to be talking about now, like the Twitter CEO thing. So you might want to go back and look at those to see the details. But the new Twitter CEO taking over for Twitter should take some of that overhang off the table. Elon said today that he will be spending more time on Tesla. Not that I think he was shorting Tesla with regard to his time, but he will spend more time on Tesla. It takes away the idea that Elon might sell more stock. It takes away the idea that he might have to pledge stock in order to keep Twitter alive. It means that the Twitter is now stable and heading towards free cash flow, which is what he said would be necessary in order to bring in somebody to run Twitter. So all those things are good, in addition to which, obviously, Twitter is a huge benefit to Tesla in so many ways in terms of advertising and passing along information. So this is a huge, huge benefit. And there was a pop in the stock last night and a pop in the stock this morning, but then it all went away. We'll talk more about that later. So that would only leave two bones of contention among folks like Gary Black and others who were upset with Elon, and that would be advertising and pricing strategy. Well, the price increases can kind of be off the table now because the prices have been going up, and they went up again this week, and they may continue to go up in the future. And what does the price increases mean? Number one, it means to all those folks who might be thinking about buying a Tesla, they better get started and get buying some Teslas. Number two, it means they're obviously selling enough that they feel comfortable to be able to do that. All of those things are good, and that should take the pricing issue off the table, at least for now. And then that leaves advertising. Well, if Tesla currently is selling every Model Y it can make, and now expanding Model S and Model X sales into Japan and other territories, well, then maybe they'll be able to sell every car that they can in 2022 without advertising, which would kind of make that a moot issue. Well, I'm not saying that they shouldn't advertise. I'm okay with the advertising. I think it'd be great, but I'm not sure it's necessary while you're still selling every car you can. And the margins are going to start expanding like crazy because of all of the things that we've been talking about on this channel for weeks, whether that's lowering the costs, whether that's IRA. By the way, Sunday morning, a big show on what are the real numbers that Tesla should get this year on IRA. Deep dive, that'll be Sunday morning. So hit notify if you want to be notified about that. Anyway, I think they'll sell every car they can make. I think that 2.2 million is back on the table. I'll talk about that in a minute. All right, let's go to, so they've also brought back the referral incentives. Well, that's another thing that Ross and Gary have been talking about that they think that they should do. Well, by the way, I agree totally with that. Back in the book, in the Elon Musk mission, The referral programs and other things like that were on my list of marketing levers that they should pull. I still think they should pull them. I agree with this decision to start with referral programs again. I love the idea that they're going to give away a Cybertruck as part of the referral program idea. So another thing that's been taken off the table, that is now back. Love it. Hope that it's really, really successful. The fact that they're raising prices is not just an evidence that they feel like they need to increase margins, and we would all like that to happen, but it means that they think they can increase those prices without hurting sales. So we're currently at 2 million run rate. If you add up the factory run rate right now, we're at 2 million. So how we get to 1.8 is beyond me. I don't know how we can possibly get to 1.8. I don't know how we can possibly be stuck at 2, since Austin and Berlin are both ramping. So I'm still back to my 2.2 number. I still think that's the number for this year. Yesterday afternoon, I just went through that list. I'm sorry, I don't want to repeat that. So let's go on. The newest FSD, good news, the newest FSD version 11, 4.1 is a huge step forward. The V12 must be close at hand because Elon already is talking about it, says that it will be 100% AI from beginning to end, everything, all the input, all the way to all of the decisions with regard to acceleration and braking and turning. Everything about planning will all be AI when version 12 comes out. And I'm assuming that must be close or it wouldn't be talked about at this point. So the safety issues, I think at this point are largely answered. That doesn't mean that there won't still be interventions because of safety reasons, but it really looks like the concentration now has shifted from safety to to comfort, to making the driver and passengers feel comfortable, that it's smooth and it makes lane changes and doesn't stop where it shouldn't stop, doesn't stop in the middle of freeways, for instance. So it looks like the emphasis now is on comfort. And that would make sense as they move forward. You want people to be comfortable when they're in the car. There's a bunch of videos already out on this version 11.4.1. You might want to look at some of those videos if you're interested. By and large, I would say that the videos were saying better, more improvements, doing lots of things better, but still some of the same hiccups. Some new hiccups. Chuck Cook had one where after it makes a beautiful unprotected left turn in his famous spot, it then went directly into the middle lane as opposed to going into the left lane and then moving from there to the middle lane later. He didn't like that at all. That was new. That was something different that it was doing. So if you're interested, lots of reporting on version 11.4.1 will be out over the next couple of days. I'm sure there'll be tons. Okay, then the first, so now the stock was going up and then all of a sudden it started going down. And so what, besides the NASDAQ, which and the general macro of the market did fall off. We'll talk about that in a minute. Besides that, what else might have been going on that would cause Tesla specifically to go down on such an amazing good news day? I mean, it doesn't get much better than this. Well, there were two big clickbait headlines that might have done that. One was the idea that Elon Musk might be stepping down as CEO of Tesla. So they started talking about Kirk might be the guy and, making it sound like it was something real. It couldn't have been any more out of the sky. There was if you look at the articles, there's nothing in there to suggest that they had any substance to the idea at all. And so that obviously could have caused people to get unnerved. Oh, he's stepping down at Twitter in 6 weeks. Well, maybe he's going to step down at Tesla as well. Who's going to run it? How much will that impact? That could be a big deal. And that's not the thing that goes away really quickly during the course of the rest of the session. I'm saying that's the number one reason that the stock went down today. And then, and some people are saying, gee, it could have been something that was thrown out there because whoever, I forget who was running that story as truth, maybe they just didn't like the idea there was so much good news out there, so they pulled that lever. Whatever it was clickbait for sure, because there was no substance. Then there was a recall of all of the like a 1.1 million cars in China. But of course, it was an over-the-air update. That was never in the headline. The headlines are none of the headlines that you see out there say over-the-air update on 1.1 million cars in China. They all say, oh, almost every car ever built in China will have to be recalled. And then you open the article, and if you look deep enough, you'll find that it's a over-the-air update. So very sad how the nonsense press is dealing with some of these things. Well, okay, let's talk about the market. The market on Friday decided that it didn't like something. And I saw a couple of things early, like POTUS and the Congress not meeting again with regard to setting the credit ceiling. I'm sure everybody's worried about the credit ceiling. I don't know why everybody's worried about the fact that they're going to not, maybe they won't raise, or maybe we'll get stuck and we won't be able to pay Social Security checks. It's not going to happen. There's just no chance that's going to happen. And so, but it certainly creates a lot of news, and these news organizations like to debate it back and forth, and it gives congressmen and other people a chance to stand up and make proclamations. It's just absolute nonsense. It's not going to happen. And so, but I think the bigger question, the bigger issue, because the NASDAQ was the one that was slammed, and the risky growth stocks were slammed even more than the NASDAQ was, including, I mean, Apple and Nike and others, was Bank of America coming out and saying that the coming recession will crush tech like 2008. Again, why was he looking for clickbait? Is he just looking to get on camera? I mean, I don't understand making a statement that the coming recession will crush tech like 2008. It sounds like a headline that mainstream media or some of the foolish YouTubers out there would do just to get you to tune in. Anyway, I don't get it. But then the tech stocks went down, and I'm saying that that was what was really going on. So Gary Black, Kathy Wood, and others have a hard time seeing that there's any recession coming when everybody's working, when you've got 3.4% unemployment, when you've got unemployment numbers that continue to be strong or, low, and employment numbers that continue to be high. You have more jobs than there are people looking for jobs. I'm not sure how you get a recession out of that. I know I say that almost every time I talk about finance, but it's true. And I don't get it. And I'm not alone. Like I say, Gary Black, Kathy Wood agree with me. Now, I had this interview with Renee the other day. You may want to look at that. Should have been on this morning, Friday morning. And Renee thinks that auto might lead the economy out of any slowness, that there's pent up demand for cars, that the cars are the oldest that they've been in terms of, the owners are driving the oldest cars they've ever driven. And so they're ready to buy a new car, but their interest rates are getting in their way. Issues of not having enough inventory in stock. They don't want to buy a used car because the prices were inflated. So there's a lot of demand build up for cars. This demand could be the thing that leads us into the next bull. I think that's probably true because the economy definitely has areas of strength and areas of weakness. Renee was also reiterating that. We've talked about it on this show, that you can see like housing is doing fine. Cars, actually, auto was doing fine. Both Ford and General Motors had good reports and good guidance. And the auto numbers that came out, the reporting last week, not this week, but last week, said, car sales were okay. So, but you've got other parts of the economy that are not doing that well at all. Consumer goods, some of those areas are not doing that well. So anyway, we'll see what happens as we go into the rest of summer and into the fall. So I think that a couple of things, interest rates are always being thrown out as the thing that's hurting. Quite frankly, tell me in the comments if I'm wrong on this. I'm looking at a lot of history, and I don't think the interest rates are that high. I don't think they're high enough to really hurt demand long term. And that's a positive and a negative. So the positive on that would be, I don't think it's going to stop that many people that long from buying a car. When it becomes the new normal, they'll buy the car. When it becomes the new normal, they'll buy the house anyway. Interest rates have been higher, and current interest rates are normal given, a long enough horizon. If you look back, 20, 30, 40 years, these are normal interest rates. In fact, if you look back 7 years, these are normal interest rates. So I'm not sure that it's going to keep the economy beat down for much longer, which is good news in terms of the economy, but bad news in terms of the Fed. Because if the economy starts to build up again and starts to get some strength and inflation rears its ugly head, well, the Fed will certainly raise rates again. On the other hand, ChatGPT, Bing, Bard, and all the plugins and startups around these large language models and AI are going to have an impact on the economy quickly. This is not going to be something that's going to take years and years. This will be more like an Apple iPhone in terms of how fast it increases efficiency. And what is the number one wealth builder and what is the number one way to cut inflation is efficiency. So cost reductions, deflation are likely to come as a result of this major change in the way people are going to be doing business. I'm already using these tools almost every single day in my job as a marketing consultant. As a marketer, I'm writing a ton of content every day. I'm writing headlines. I'm doing SEO. So therefore, all of these things are so much easier when you use Chat or Bard as your starting point. It's going to change really pretty much everything when it comes to content. And so it will definitely drive efficiencies. A lot of folks don't get that the efficiencies in a market, whether it's individual efficiencies, if you become more efficient as an individual, then you make more money per hour. If the company becomes more efficient as a corporation, then it makes more money for its assets that it has and for its equipment, machinery, whatever. If it makes more with less, then it's going to be more profitable. And then that's true for countries as well. Always, it's a little hard sometimes for people to get it in their head that that's how things work, but that's how they work. So that we could see a massive boom in the economy as a result of the wealth that will be built out of these new models. All right, so I promised you some late news. Man, just before I'm going to go on, all of this news is breaking. So first of all, and a lot of it is more CNBC baloney. I can't believe they have to hate Elon. I don't know what's going on. So they have a negative headline where they say that Colin Rush of Oppenheimer says that Tesla's real issue is around demand. That was the headline. That sounds like a negative deal, right? So if you didn't read it, if all you did was grab the headline and you go, oh, wow, Colin Rush, who's kind of likes Tesla, is negative and saying that there are real issues around demand. Oh yeah, well, go ahead. Look up the article, look up and watch in this particular case, it was a video. Watch the video and tell me that's what he was saying. Absolutely not. It was a very positive, even-handed to positive in terms of Tesla making these price adjustments in order to maximize the total cars that they sold so that they can sell SAS later. I mean, I'm sorry. This was absolutely negligence to the point of almost criminal negligence with regard to the headline. But if you like that headline, we'll try this one. They said that EMJ's Eric Jackson said that Tesla's major growth was behind it. That was the headline. Tesla's major growth is behind it. Okay, you know what? If you watch the video, he actually says those words. But in order to make that headline, you again would have to be criminally negligent because he was not saying that their growth was behind it in the way that this headline would be interpreted by everybody that read it. He wasn't talking, oh, they're not going to have major growth into the future. That is not what he was saying. He was saying that their growth, their major growth, is what is behind the future of Tesla being able to just knock it out of the park, and that he's expecting 2022 numbers to be great. The major increases over 2023 increases to be major increases over 2022. It was a very positive interview. They grabbed that one sentence, which was absolutely out of context, and used that as a headline. Again, criminal negligence. And then finally, there was this lawsuit, class action lawsuit, saying that software updates are hurting batteries. I have no idea what the technology, what the truth of that matter is, the science. I would be very interested if somebody can come on the show and talk about the science on this, because I think the science is even wrong, but they were talking about up to 20% reductions in range because of some of the updates, some of the software updates that have taken place. Yeah, I don't know. But these three things, all three of these headlines were within the last hour of the trading day, when the NASDAQ was starting to recover, when some of the other growth stocks like Apple was starting to recover, and then Tesla did not recover and stayed at the lows of the day. I think it was these three headlines that kept it from enjoying the recovery. So is this intentional? Are these bad players? Are they just so completely bad at their jobs to be this negligent? I can't tell you which is going on, but I will say that's all I got for you today on Friday night. Be sure to watch all the stuff coming up on the weekend. Really, really cool stuff. Tomorrow morning, I will be giving you the last of the citations. I think there's 7 more of those, and these are all macros. These are things that could happen in the macro, that are likely to happen in the macro in the next 12 months. And if you watch this show, you know that I think Tesla is being held down by the macro. I think that's why it's as low as it is, not because of anything Elon tweeted or, et cetera, but the macro is what's holding it down. And that if these macro catalysts happen, then the stock market goes up, and that will allow Tesla, which will probably be at 2 to 3 times the same rate, which is the typical delta. They will go up as well. Anyway, if you liked this content, please like. If you would subscribe and hit notify if you'd like to make sure you see this other content that's coming up this weekend. And then, of course, the opportunity to support me in this channel, that would be great if you want to do something with Patreon. So this is Randy Kirk, and it's been great talking to you.